My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited, and here is your weekly technical analysis of New York and London coffee markets. I'll start with New York coffee. At the start of June, prices peaked over the important upper time of the October 2019 to February 2020 shallow bullish shift pitch walk, currently at 165.90. The market seemingly started to settle over this shallow bullish shift pitch walk, and yes, prices did indeed trade over it. But, and it is an important but with bearish or indecisive patterns throughout their time over. Hence, I suppose it was no real surprise that we started to see a descending triangle of sorts. Hence, I placed target X in the 152.25 area as a result of this pattern. I was not wedded to the idea at the time, but I was prepared for it. 2 Mondays ago, the market made a gapping move lower, breaking out below the descending triangle. 2 Thursdays ago, the market reached target X and then stalled. In some ways, it was a gratifying stall, as it provided or proved the idea of a descending triangle was a true idea. Once completed, something else would take its place. The stall was also coincident with the middle time, currently 152.80, of the November 2020 to April 2021 bullish Andrews pitchfork, breaching it but not closing below it. And it was this that drove prices back higher, such that we are today once more back up over the upper time of the shallow bullish pitchfork. And in the process, prices have punched up and closed over the significant downtrend from the June high, currently at 154.75. This is an important downtrend, as it not only makes up the topside downtrend of the recent descending triangle, but is also a three-pointer. The market sliced up through it as if it wasn't there, indicative of some potentially strong bullish support. It now seems the market may be set for either or both of the upper time, currently at 165.90 of the bullish Andrews pitchfork, or the May high at 168.65. I'd also add another potential upside area, but this is a bullish one designed for helping the market higher in an orderly fashion. It is the middle time, currently 168.15 of the newly drawn April to June bullish Andrews pitchfork, and this changes every day. This may show the bullish angle of attack of the market going forward, and as the Andrews is more acute angle than the shift for the same time period, may be more suitable given how easily the market dealt with the downtrend. Okay, London coffee. Once more, just to recap the big picture, we had 2 sideways triangles in this market, one from summer 2020 and the other more recently since mid-March. The earlier one had a false break higher, the new one did not. Since then, prices have reached all their targets topside for both triangles. There was some follow-on higher as prices reached up 3 weeks ago and failed at the big 50% Fibonacci line, February 2017 to April 2018 move at 1694, and actually doing it in style with a huge key reversal down, closing below the middle time, currently at 1719. The early April to mid-May bullish Andrews pitchfork. Now, this pitchfork has been crucial in setting the timing for the move higher, as last week prices tested down to the lower time, currently at 1642, breached it, yes they did, and even closed below it, yes they did, but only the once. There was no second confirmation, closed below it despite that day prices punching down through and closing below. It was also a combined key reversal down and bearish engulfing pattern. This combined bearish pattern, seems to have galvanized the market from its reverie. And the next day, that's last Wednesday, we had prices shoot up with an immediate countering bullish double and rally ever since, such that we're now closed today the highest since November 2018. We seemingly only stopped the rally this time at the middle time of the same early April to mid-May bullish Andrews pitchfork. So what now? Well, all this toing and froing over June after the initial move higher has created a bull flag pattern. It seems to be the driver for the current move upwards. An initial target X topside for this pattern would be in the 1700 area, but that's already been achieved today. A full target X1 would be in the 1830 area, and that's off the top of my daily chart right now. Please note, full targets are not achieved that often in such bull flag moves. Finally, there's an interim target that may still be achieved for this pattern. That is in the 1775 area and is designated target X2. Only a full breakdown of the lower tine of the bullish Andrews pitchfork would negate these targets on the top side that are still left, and even then such an action may push the market to a shallower yet still bullish shift pitchfork for the same time period. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.